long. As they take the price down to sell side liquidity to go long, there is value from the risk premium line. Look in the background, you'll see that there's a lot of value from the risk premium line. In addition to which, if you go through yesterday's process, I think Kim quite liked this as a simple little process, but after today's class, as a reminder, we check the inventory risk assessment, we check the adverse selection risk, and the answer to both those questions was no. Where is the key buy, or in this case, sell side liquidity? So we look to the left, we find where the sell side liquidity was, get involved with it if we've got a yes to both questions, or a no to both questions, sorry. And then we check the max. We check the max to see that the market maker agrees with this, because the market maker should agree with this. If they don't, we're maybe not at the right price yet. In addition to which, you'll see that we had dealer keys. No shit, Sherlock, we have the dealer keys every day. And you'll see that one of our dealer keys, in fact, one of the major dealer keys, was at 18,745. Well, isn't that exciting? Because 18,745 last night at 12 o'clock happened to be this price here, which happened to also be the exact price that we had sell side liquidity at. Unbelievable! No, not really. So what else did we recognize? We'd already done a classroom on what bull steepeners were, and we'd already recognized last night that we had a daily bull steepener in place. What? So we've even put the bulls in place on the bond market for a buy on the NASDAQ as well. I can't believe this. This is getting better. And then we move to the other liquidity questions from the tweet from the 12th of May. If you're bullish, you will see the liquidity being bought into at the lows. Price drops down, somebody buys it, price goes up. Price drops down, somebody buys it, price goes up. Price drops down, somebody buys it. It's us. Liquidity, we trade liquidity. So you're either looking to use the liquidity, or you are the liquidity. If you're the seller here, you are the liquidity. If you're the buyer here, you're using the liquidity. The takeaway from that trade, an easy $400. The next trade after that actually was even better. We got one of the best F3 trades you will see in a long, long time. You couldn't make it up. I mean, it's like if Max had to have a poster made, this would have been the trade, right? This would have been the Max trade for the poster. So we've got this this brilliant storyline forming. We've got the bulls all over a shot here. We've got bonds ripping higher. So we're in a bull market, regardless on bonds. So we know we're going to be buying equities at bottom edges. So we know we're going to be in this, but now we know we're going to be in this. You can obviously see one of the things, we get a guaranteed discount price. Secondly, we're obviously now held below the 745, so we've got to be careful. So we have to find where that guarantee is, that discount price is. We're starting to work into this beautifully. And then all of a sudden, we check our volume, and our volume is divergent. Short-term sellers coming in, so we want to make sure it's after that. We get it after that. We don't have any inventory risk anymore. And then we ask Max, what do you think of it, Max? What do you think Max said? Max said F3. I'm glad he said F3 and not F something else. But he said F3. And when Max said F3, you can see it's not FO, because he would have been saying FO here, right? There's an F0 there, and there's an F0 there. So we've got an F0 there, and we've got an F0 there. So he's basically saying F0. So then we move into this phase, and look at what he says here. He doesn't say F0. He says F3. And you know that he says F3 because you can see the red aggregation line, composite, going above the middle price. See that? Going above the zero. See the zero? So it goes above the zero, suggesting that we've moved into an F3. Now it's still dropping, but it is divergent. It's also in a pin zone, which it makes life just that little bit easier. when you're in a pin zone, isn't it? So when you're in a pin zone, you now know you've got the discount required. You know the probability is there that Max is going to get involved. You know that the value was there. And we know that the risk of adverse selection is 0 because we've seen the value going north. Now, we had to be careful because there was one value that was against us, and that was early price volatility. So we had to wait for that early price volatility to switch off. But when it did, we were ready to go. So we checked out early price vols, and you can see that they were relatively bearish early on. But you can see just at the right moment, they turned. Oh my goodness. Just at the right moment, they went bullish. Right at that point, which set up the move. And obviously after the move came in, vols never moved. It just went flat, so there was no divergence. So we got the change that we needed to get that bit of business done. I loved that trade this morning. And the trade, of course, that one there went from a low price of 728s to 758s for $600. So we did $400 on the first swing this morning, $600 on the second. And that gave us a very easy total for the day of $1,000. Come on down. The price is indeed right on this occasion. So with $1,000 profit on that trade, I think we were in good shape. I think, there's nothing that was going to stop us now, is there? There was nothing that was going to stop us on this bit of business. So great trades, lovely outcomes, easy money. Let's get through today's data before lunch, and then we'll get started. We do have some data today, and it's just something we should be aware of. In the overnight session, the UK CPI trends orders survey in the London session overnight for you guys coming in disappointing at minus 33. It's not the biggest release in the world. It's not the most it's not the most followed release in the world, but it is still a negative kind of grubby number there, isn't it? But it is what it is. We can only deal with what we get. So UK CPI trends minus 33. Forecast was for minus 20, and that's well outside the boundary of the worst forecast, which was minus 23. So that's a terrible, terrible, terrible number. Anyway, the main numbers for today, actually, in the form of numbers, come in the form of the the Canadian CPI numbers. So we have a Canadian inflation print expected with a slightly bullish skew, expected to come in at 0.6 month on month. The forecast range 0.4 to 0.7, and that's due out in just 10 minutes. Remember, there's a lot of Canadian numbers. There's the median, trimmed, and common numbers, which don't have forecasts, but the Bank of Canada do look at those numbers, and they obviously have their own metrics that they follow very closely. But these numbers are expected to be hot, so I didn't want to be long equities into these numbers, because they could be, certainly with the skew we've got, they could be a hot skew. So obviously, when we got our profit on our equity long positions this morning, I thought it was good to get our money, get away from the trade, and get ready for a possible sell getting in. Now, obviously, if you decided to take the sell on the retest on the Nasdaq, well, good for you. You've got a brilliant bit of business there. I think the retest was tradable because bonds had started to sell off at that stage as well. Vols were still pretty grubby in the basement as well, and therefore there was elements to that trade. I think with the price of oil and the price of gas and the price of copper prices going up, it certainly put an inflation lean on that sell as well, which gave you a possible short sell off of that measured move. Let's just take a look at it actually whilst we're talking about it. So we obviously got our profit takeout here. So the trade I was thinking about was this one here. Reason being, of course, look to the left and find buy-side liquidity. We've got a fair amount of paycheck starting to stack up in this area, haven't we? So with a paycheck stacking up, you've got to be looking at that and saying, is there anybody that would want it? There's a lot of people who would want it. I've just told you about the Canadian CPI print, which when equities are up here, that positive CPI print hasn't been priced into equities yet, has it? In any way, shape, or form. So you're obviously thinking that equities should be towards a bottom edge for the CPI print, and then we can pick up the pieces at that stage, can't we? So there's a real possible reason to be selling this. Now, let's take a look at it in terms of volatility. Well, volatility hasn't changed. It's maintained its very kind of cheap curve here at the present moment. So you can see that it has got a very, very flat curve. So you're imagining for a second here that this probably is bearish at the top edges. There's probably a clear bear coming in on this one. And, you can see that bearishness is probably going to be the right thing to be involved in. Now, it's not just about that. Take a look at bonds. Bonds took a buy-side splurge, but then they dropped hard. And obviously, it left this possible sell trade established at that point. Obviously, that means that you're obviously going to be seeing real yields following suit. And you can see the same thing happened on the real yields, as would be pretty much obvious. Real yields always coming back down in line with that bond trade coming down as well. And that puts your idea into this top edge as a real money sell. Now, the inflation metric that we use, obviously, against oil and against copper prices. Well, let's take a look at that. Well, the inflation was really bullish for us early on, but you can see that inflation, which is interesting considering we're coming into an inflation print in just 6 minutes, you can see that inflation became very, very, very negative for equities at top edges, didn't it? Very negative, having been pretty positive for the entire morning session here. So with a positive inflation, this little turn into negative inflation would have been quite a strong signal to get maybe a bit of short business done up here. So then you're looking in this area. What are you looking for? Buy-side liquidity, buy-side liquidity. You're looking for leans, and you're also looking for the volume story. Now you're going through the questions. I've managed to reduce my adverse selection risk to 0. We've went through all the adverse selection risks. There is no adverse selection risk to this short sell. So if there's no adverse selection risk to this short sell, what could there be? Well, of course, there could be inventory risk. So we're obviously going to take a quick goosey at that to see if there was any volume in that move. And wouldn't you just believe it? There was no buy-side volume, according to things like OBV and volume analysis. So we're clear to go into a short sell here. We're not having to fade against a lot of volume. Now, what did Max make of it all? One would hope that Max has a divergence, that's for sure. So let's take a look and see what Max thought of the sell. Well, Max does have quite a strong divergence. You can see that we are very, very easily divergent. The only challenge we've got is that Max market maker seems to be on the bottom edge, not the top edge. Well, that's probably because obviously it was a spike higher. The market maker never really had a chance to think about it. But obviously, in line with that, you're not going to be selling it at lower prices. Doesn't mean you can't sell it. We've got plenty of divergence to sell it into. It just means that you're not selling on the way up. You're selling it on the way back down again. So the best place to sell this is then to join in when we cross back into the Heisman trade there. And obviously, if you did that at 750s, you've traded 730s, you've made yourself $400, and you are in pretty good shape for closing out your positions ahead of a suggested hot print on Canadian CPI numbers. Now, when I say hot print, it's still below the prior month's forecast, but it's hot in terms of where the skew is. The forecast is for a 0.6. The skew low is 0.4, and the skew high is 0.7. So the chances are we will come in around about that 0.6 kind of level. And obviously, if we do, then of course it's absolutely no change whatsoever. Whereas we're looking for inflation to be dropping, no change is not a good look for the countries at the moment. And that obviously is going to put maybe a bit more selling into this NASDAQ position. So anyway, the data is due out in just 3 minutes 40. I'll bring it across. You can watch it come through. And this, as you can probably guess, is pretty much it for the rest of the day. We've got speaker after speaker after speaker after speaker after speaker after speaker on the afternoon slate, but nothing in terms of headline data. So data coming out. Also pay attention to these numbers here, the median and the trimmed, and make sure you're looking at these prior numbers. So let's see how this data comes out. See if it is hot. If it's hot, equity sells. If it's cold, equity bids the pin zone.